Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds. And today we're lucky enough to have Neil Sweeney, CEO for Reklaim. Trades on the TSX Venture Exchange with the ticker MYID. Hey, Neil, how you doing today?
I'm great. Thanks for having me. Nice to connect.
Yes, nice to connect. It was good to kind of connect last week and learn a little bit more about the company. And really enjoyed our conversation and thought, whoa, we should have you on the show and sort of let everybody else sort of hear some of what you got going on with Reklaim. Before we get too far into all that, let's get our 60-second stock pitch out of the way. First question, it's an easy one. What is the name and stock ticker of your company?
Name of the company is Reklaim with a K. Trades on the Vancouver Exchange under the symbol MYID. Also trades on the OTC under the symbol MYIDF.
And what's your approximate market cap today?
10 million.
And what is Reklaim's business strategy? Maybe just explain quickly what it does.
Well, Reklaim was created half a dozen years ago, really to try to give consumers some optionality around the data profile that you, me, and everybody has. The idea here is, as a consumer, you can come to Reklaim, put in an identifier, meaning an email address or a phone number, verify who you say you are, and then what we will do is we will show you all the data that is currently circulating on you online. Usually that's the first time a consumer has ever actually seen that data. Once they see that data, consumers are able to then reclaim it into an ecosystem that is then controlled by them, at which point they can then edit that data, add to that data, or if they choose to, option that data directly to a brand platform for its use. And when it's used, they receive a royalty or compensation directly associated to that use. So that's the philosophy: democratizing data, giving consumers a seat at the table. This is really what our whole mission is about.
Excellent. And approximately how many shares are out?
116.
What percentage of the shares are owned by insiders, approximately?
35%.
And are you currently profitable and fully funded for the next 12 months?
We are both.
And any short-term catalysts or milestones that investors should watch out for?
Well, I think a couple of things that I think investors are increasingly starting to realize here is that, kind of back to your previous question, this is a company that's growing 30 to 50% per year, has 80+% gross margin, 90% reoccurring revenue, makes money, generates free cash flow. I think in the universe of small cap stocks, that's rare. So I think the plan here is more of the same. We had a good Q3 number. We expect to have a good Q4 number. And as we enter into 2025, really, we don't foresee there to be any challenges regarding continuing on with this profitable growth.
Well, excellent. Thanks very much for covering that. You did a great job. Maybe you could give us a little vantage point into like who you are, what's your background, how you got involved in the business. What's your claim to fame?
Claim to fame, I don't know. I'm the masochist who's been doing this for like 25 years. So, I don't know if that's a positive or a negative, but this isn't my first startup. I think I clearly have a curiosity around this notion of sort of what's coming in the future. And Reklaim as a company was incubated inside of my last company, which was a company called Freckle, which was taken public. Ironically, Freckle was incubated in my last company, which was a company called Juice, and Juice was incubated inside of the last company, which was called Stream the World. So there's a bit of a kind of a Russian-Ukrainian doll type situation here where we're pretty good at actually seeing what is coming on the horizon, incubating that technology, scaling that technology, and kind of commercializing that technology. I think what's probably a little bit rare is that I tend to fund the companies in the early stages. And so it's an important piece for investors to know is that I wasn't some CEO kind of brought in off the street with no context on this product and is looking to commercialize the model. This product came from my head. The funding around the development of this product came from my wallet. And so inevitably I have, I obviously have a a different opinion as it relates to raising capital, dilution, cheap paper, things that generally drive most investors absolutely nuts. So we try to be really good custodians of capital. We try to be obviously good shareholders. And, candidly, it's primarily because, I stand to benefit from the success of this company, as does any other investor, but that should give them peace of mind that, I'm obviously heavily invested in this company. And so as a consequence, I try not to make irrational decisions. So lifelong kind of entrepreneur, been doing this for a while. So hopefully that kind of helps give some context as to a little bit about me.
Yeah, excellent. Thanks for that. And you kind of touched on it a little bit, but I was going to ask. The company was originally called Freckle, and then there's been a name change or a bit of a transformation. Is that kind of correct?
Yeah. So the original company was Freckle, and I won't bore you with kind of all the details associated to that, but Freckle was a very big data company focused primarily on the location space. And so to simplify that model, we would collect location data out of a handset to then determine whether or not you as an individual were seen in McDonald's or a Chrysler dealership. McDonald's would buy that data to then determine same store sales growth, but then they would also buy that similar data on Burger King locations to determine competitive analysis. Hedge funds would buy that data to try to determine how many cars were in a parking lot. That was a good business. We sold that business to a private company in California called Place IQ. We had the public listing. They tried to buy Reklaim as well. The answer to that was no, and that I wasn't going to be going with the location company, and I was going to stay with this nascent company. So this was at the beginning of COVID, sold that business. We have this public shell. It's the beginning of COVID. We kind of have this nascent product. And so we inherited by default for Reklaim, the public listing. And so over the last 4 or 5 years, we've really been kind of growing the business into the public shell. You could probably make the argument that half a dozen years ago, this probably shouldn't have been a public company and it should have been a private company. But that was in, 19 when everybody was hiding under their desk because of COVID. And so we didn't have a lot of other choices. And I think now we're starting to kind of fit the profile of, what a microcap or a small cap actually looks like. But the first few years, no joke, those are tough years for sure.
And what's a day in the life of a big shot CEO like you now? What's a typical day look like?
Yeah, well, I'm definitely not a big shot CEO. And like anybody that looks at my day-to-day life will be like, no, thank you. So I've been trying to offload like anybody who wants the CEO title here at Reklaim, like you can have it. Like I'm happy to just do the work. But again, like the thing about, I think sometimes people sort of forget about this is that in a small company, the CEO is involved in everything. I'm the guy that has to raise capital. I'm the guy that's doing IR. I'm the guy that's involved in finance. I'm the guy that's involved in marketing, product, engineering, sales, marketing. It kind of goes down the list. Now, that changes as the company gets bigger and you're able to bring more people in. So, I'd say depending upon kind of where we are as a business or kind of where we are in the life cycle of the business, I tend to over-index on different verticals inside of the business. Sometimes I'm more focused on the product side. Other times I'm more focused on the sales side. It's usually one or the other. And I think this idea that, CEOs live these balanced lives, no, that's totally wrong. You whipsaw between one extreme and the other, and then you try to kind of counterbalance it. That's just the way it goes. So, currently I'd say we've been spending a lot of time here on the sales side of the equation, kind of growing that revenue, growing the team, looking at our positioning in the market. So for me, I have my own little hacks as to kind of how I actually work. Like as an example, like I don't take meetings in the mornings. So between kind of 9 and noon, I work. That's what I do. The reason I do that is because the nature of a small company is that if you don't have the discipline in your calendar will get taken over by a variety of individuals, and you'll have half-hour meetings every 45 minutes. You'll end the day and or week having done a million meetings and actually never gotten anything done. So for me, it's, I start early. I do a ton of work at the beginning of the day before most people get out of bed. Then between 9 and kind of noon, I do my kind of highest priority work, depending upon the vertical that is. And then usually in the afternoons, that's where I will take as many meetings as, people kind of want. And that sort of jumps around between, obviously sales, product, marketing, etc. So I've got my little shtick or my hacks, as I like to say, as to kind of what works for me, but it's busy. There's no shortage about that. It's definitely busy.
And where's how many offices do you have? Where are you based?
Well, there's 0 offices. It's a fully remote business. That's a consequence again of sort of this company being created during COVID. The company is, technically in Toronto. I would say the entire sales and marketing team is primarily based out of the US and it's mostly New York based. The lead of engineering is here. A lot of the senior management is here in Toronto. But we do have, individuals that work out of Mexico, Calgary, Los Angeles. We have one engineer from Brazil, one from London, Ontario. This is the nature of the workplace that we have kind of today. So, it's a fully remote business. And so you're trying to really find the balance between being fully remote, but then understanding the nuances and kind of challenges of being fully remote. I don't think it's binary. I don't think that this notion of being kind of fully in office, it works, nor do I think that being fully remote works. They both have their flaws. And so you have to understand the nuances and the flaws associated to that and figure out how to actually build them into your business and your model.
Yeah, so when I was doing a bit of research, looking for interesting stocks, looking for profitable microcaps that maybe haven't been already kind of picked over by the crowd, I came across yours. And when I was reading into a bit of the business, I was pretty interested. It seems like a growing sort of like problem or a growing, growing sphere where, it's very topical right now. Individual sort of data, privacy, even just hearing about some of the AI large language models, they're getting into some issues with where did they load data. So anyway, it's pretty interesting, but maybe you could kind of do a deep dive here and kind of explain like what is Reklaim, what is the sector that you play in, what is your product, and maybe it could fill us in from your perspective. What does this company do?
So I think, my position as to how you build product is not that different probably as to how you pick investment. When I start with product, I always think about how big is the opportunity, how big is the moat. That's not that different than I think what a lot of people see from an investment point of view. So the idea there is that if there's a bigger opportunity and or potentially a bigger moat, you're trying to carve off a subset of that to actually grow your business. If it's a smaller market or you're trying to build a company specifically in, say, Canada, you're limited geographically by the boundaries of the country. I think the important thing for people to understand is that this is a $750 billion a year global data market. So massive. I would actually say it's probably bigger than that, but that's kind of the reported market. So, and on top of that, there's approximately 8 billion consumers in the world. Okay, let's park that for a second. 8 billion, or every single consumer on the planet today has a data profile. We agree. No consumer has access to that data profile. We probably also agree. Most people would also probably understand that their data is being amalgamated by various platforms to be used as a free input. Everybody knows that. Okay. So there's nothing historically wrong with that. Remember the point there being historically. The whole data market, especially as it relates to the US, which is the biggest data market in the world, it was able to grow as quickly as it was because there was really no rules and regulation around it. It was a giant Wild West. And so what ended up happening was there was this explosion of arbitrage or explosion of data brokers or explosion of DMPs, which are called data management platforms, where they would hoover up as much data on consumers as possible and really then arbitrage it out to individuals. Very high margin business. And candidly, that's what sort of created this $750 billion market. I would argue that without that happening in the past, you wouldn't even be having the conversation as it relates to AI now, but that's a sort of a separate conversation. We'll get to that. The thing that's happening though now, and important, is that it's already started. This isn't a situation where it has to take place in the future in order for Reklaim to work. False. What's happened here really is that privacy regulators around the world have gotten wise to this notion that consumers' data is being amalgamated and used unbeknownst to them. As a consequence of that, they don't like that. And so what they've done is they ventured into the market and put more regulation in and more to require data companies to really have more consumer participation. So what that means is that you have this $750 billion market pivoting from one with no consumer inclusion to one that requires consumer inclusion. This pivot to me is not that dissimilar to bricks and mortar moving to online or combustion engine moving to EV. It's not really a question of, is it going to happen? It's really a question of how long is it going to take to happen. To give you some additional context here is that this happened in Europe with the implementation of a privacy law called GDPR. You don't want to know all the nuances of GDPR, but net, it means that you have to actually get explicit consent from the consumer in order to use their data. The North American, and especially the American approach to the implementation of GDPR was arrogance. And it was, that's European, it's never going to come to the US. There was no situation where I believed that that was going to be the case. And so the origin of Reklaim was, that law will come to the United States and it will disrupt this entire $750 billion market. And what will happen here is that the companies that have the desire and the demand for data will now no longer be able to buy it. And they will be looking for a partner that has the ability to provide them with the same data that they've been buying for years, but can buy that data at scale and is also compliant with the new laws. The changes that are happening kind of in the space, and even if you look at 2024, we had, coming into 2024 in the United States, we had one state in the US that had really kind of changed its privacy laws to be more, that made consumers to be more involved, California. Everybody sort of focuses on California. Since then, there's been 19. So every state in the US is changing their privacy laws to force more inclusion. And there are some which are incredibly onerous, like Washington is insane. The Maryland data laws, which are coming in next year, are insane. If some of these laws actually come to pass, like you can't do data in these states, which has this tremendous effect on the overall data market. And so Reklaim as a business was really set up based on this idea that, well, one, I've been in the data market for a long time and I've been selling to brands and companies who use data. So I have a pretty intimate understanding as to how data is collected, processed, transacted, priced, distributed, etc. That's a unique skill set that we have here at Reklaim. But the thesis here was this market's going to pivot. And when it pivots, all of these brands, all of these platforms are going to need a new partner because their historical partner is not going to be able to supply them with the data. As this inflects and gains steam, Reklaim will actually benefit increasingly more because we can sell them this compliant data. Why is our data more compliant? Because it's coming directly from the consumer. You as the consumer are choosing to sell that data. And so it's a crude analogy, but we facilitate a transaction between the buyer, say UPS, and you as the consumer. We're almost like facilitating an Airbnb transaction between two independent parties or an Uber transaction between two independent parties. We are doing the same thing, but we're just doing it with data. We're allowing independent consumer to sell their data to independent brand. There's a transaction, the brand gets the data, you get the compensation, everybody's happy, rinse and repeat. For us, the model is we take a commission and a percentage off of every transaction. And so the more data we sell, the more money we make. But the more data we sell, the more money consumers make, which binds them to the platform, which encourages them to sell more data, which allows us to make more money, so on and so forth. So that's the philosophy of Reklaim and really kind of the market that we're trying to solve. And I mean, I could go on for 50 minutes on this topic if you want, but this is the simplified version.
That's a great overview. Seems like a big issue. Sounds like our Facebook ads are going to get more expensive. But are there Do you see it as kind of a winner-take-all sort of market? Are there a number of other platforms that you're sort of competitive with, or is this still like an evolving sort of completely sort of new industry that, that's caught some data brokers by surprise?
I don't think it's caught the data brokers by surprise. I think that they are hiding, but there's some catalysts in the market. One of the biggest data brokers in the market is Oracle. And I was on record as saying I felt that Oracle as an entity was going to get sued by every attorney general across the United States. And the reason I thought that was because they were holding a profile on every American inside of a glorified database in the state of California with no explicit opt-in. I'm like, they're going to get absolutely hammered. This year in July, Oracle walked away from that business. They didn't sell it. They just walked it. Period. It at one point was north of $1 billion a year that they were actually doing in that, and they just walked it. It later became known that they actually had a class action lawsuit specifically around how they were maintaining data. Now, again, maybe not the best example because Oracle is a massive company, and you could probably make the argument that they shouldn't have been in this little nickel and dime business compared to their overall arching business in the first place. But I think it's an important piece because if the biggest data broker is saying it's not worth it to us for us to be in this market, there's over 3,000 registered data brokers in California alone doing billions of dollars of data. What are they doing? Because if Oracle's walking it, why are you still in the business? If they can't make it work, why can you? They're all going to zero, period. No ifs or like they might, no. They are 100% going to zero. And all of that money needs to find a new home. Who are the companies that are going to benefit from that? We should benefit from that. I mean, we're not going to get 100% of it, but like we should benefit from that. And so I think I don't necessarily think it's going to be a winner take all, but I do think that the way that data has been collected and stored and used, that is changing for sure. Some of the things that we're seeing in the market right now are already repeating themselves. What's happening in AI right now is very similar to what we saw kind of happening in the social world. What's happening with a lot of these AI models is they're amalgamating and hoovering up as much data as they can before the regulation kind of catches up to them. My personal belief is that they know exactly that they are infringing on privacy for sure, but their strategy is we're going to get so big and so powerful that by the time the regulation comes around, we're going to be the new Facebook of AI. Not coincidentally, they're kind of all coming out of the same sort of jurisdiction, fraternity. So I think that there's a lot of similarities here. But, kind of going forward, when you do think about kind of what is the future of data, and even as it relates to AI, the majority of data, of useful data in the world today, sits behind logins and passwords. And so in order for AI to really evolve, they are going to need to actually access other sources other than Reddit to actually train their models. My prediction is that these AI models are going to come to the consumer and actually look to actually purchase this data directly from the consumer. It would be interesting if there was a company that allowed consumers to sell their data directly to a brand or a platform where this could happen. That's what we do. So, I would say that today we're solving the gaps as it relates to compliance, privacy, and this pivot that's happening in the market. When you kind of go forward, where's the future of data going? My belief is that I think the model actually scales, and I think it works in kind of in the direction that the AI world is going as well.
And so, in terms of your customer, who's your sort of customer? Is it a business customer, or is it a consumer customer? Is it a two-sided market where you have a bit of both? Maybe you could talk about who your sort of like your customer kind of profile and whatnot.
I mean, technically it's a two-sided market, but it over-indexes on the B2B side. And the reason for that is there's been a lot of companies that have tried to actually do this model. They've all failed. And I think primarily they've all failed because I don't think that they necessarily understand the nuances of data and how it's purchased and how it's sold and so on and so forth. That's my own personal belief. Our theory here is that if you just think about it in the most basic sense, the more buyers of data that you have, the more happy the individual is that is selling their data. So Neil is sharing his profile with one brand today. Tomorrow, he's sharing it with 3 brands. I could be sharing that data, the exact same data with one brand, 3, 5, or 15. I'm getting 1, 3, 5, or 15 royalties based on the same profile. I'm comfortable sharing that data, but my opportunity to earn is actually going up. So, we focus a lot on increasingly finding more buyers of data. And so the buyer of data is, historically it's a brand. So a Heineken, a Unilever, whomever, that requires this data in order to activate their marketing campaigns in social, in programmatic, in search, in connected television, so on and so forth. We also sell directly into platforms like PubMatic, The Trade Desk, Google, Amazon, etc. These platforms use that data to offer to their individual clients. Think of those platforms almost as like grocery stores. In grocery stores, you have cans of soup on the shelf. Those cans of soup are on the shelf so that customers can actually buy them. If your particular can of soup is not on the shelf, it cannot be purchased. The Reklaim data, or its can of soup, is ubiquitously distributed across the biggest kind of data marketplaces really in the world. And I think that that's an important thing for investors to think about, because Snowflake, Google, Trade Desk, whomever, they're not flippantly just allowing anybody to put things on the shelf. No different than Loblaws, Sobeys, Trader Joe's would do the same thing. Like, they all do a vetting process to determine what is the appetite, what is the differentiation. And if there is appetite and differentiation, we will carry it and distribute it, and we will help promote it. The fact that, Reklaim, as a relatively small company, has ubiquitous distribution across the largest data companies kind of in the world and is working with Fortune 500 companies should give investors some confidence that we know what we're doing, or that there is an appetite for this data. And I think you don't have to take my word for it. It kind of represents itself in the financial statement. If the revenue continues to go up and the margin continues to go up and the platform revenue continues to go up, what I'm telling you here is manifesting there. And those are the types of things that, from an investment point of view, you should be kind of keeping an eye on for sure.
So has there been some considerable work to sort of both, obtain consumer data as well as onboard brands or these publishers or whatnot who are looking to purchase this data?
Yeah, I mean, there's tons of work. I mean, our sales team is sort of divided between kind of 2 different pillars. They are talking directly to brands and advertising agencies. I mean, our entire sales team focuses on the US. So while I am Canadian, our entire business is US driven. And that's my own kind of personal belief, is that I think a lot of Canadian companies start here, are successful here, and then they try to move it to the US thinking that there is, some sort of synergy. There is zero synergy, zero. And you were literally like kind of starting over. So I kind of learned this, I would say, many moons ago, where if you're going to start a business, there's no point in starting in Canada. You might as well just skip Canada, go right to the US. And if you decide to backfill into Canada, kind of call it a day. So our entire business and our entire revenue model is out of the United States. The team is focused on, talking to brands, talking to agencies. And then the other side of the team is, talking specifically to those individual platforms, getting them to carry and distribute our individual data. The marketing team works on consumer acquisition. I would say we don't spend a ton of money specifically on consumer acquisition. And again, that's my own preferential model. I think that the startup Silicon Valley road is littered with direct-to-consumer companies that have this dependency on acquiring individual users and not churning them. And there's thousands and thousands of these individual companies. We have plenty of consumers, plenty of data. We are consistently working on bringing new consumers in. We don't churn a lot of consumers because for you to leave the platform, you're foregoing any future royalty. So once you've been paid, you've kind of checked the box. There's no reason to leave. And there's some self-balancing there, whereas you make increasingly more money, there's a higher probability that you will refer. So that's kind of our model. Is it definitely over indexes on the B2B side. Nothing bad happens when you increase the number of buyers of data, because the consumers just are the direct beneficiaries of that.
And what's in it for the consumer? You talk about royalty, like I guess how in theory does that sort of like translate? Like, I don't know, maybe we could use me as an example. If do I go and like create a profile, or are you going and cleaning up data from others and I just happen to be part of it?
Yeah, so there's sort of two verticals here. Sort of one is the initial model, and then there's the sort of the emerging, call it V2 model. So on average, consumers can make between $5 to $10 a month. That's the typical kind of rate that they can make. It's passive, so it automatically goes into your wallet. You can then redeem it into the equivalent of like a PayPal account. If you want to take it as a gift card, you can. If you'd like to give it away, you can as well. But that's sort of the baseline. I mean, obviously, some people make more, some people make less. That's kind of the general kind of consensus. What we are increasingly seeing, though, is that, there's additional components of the model that have been put into the product that are more focused around privacy. What I believe is that once you reclaim your data into the ecosystem that we control, you really have almost sort of two binary choices. You can choose to share that data and be compensated, or you can choose to protect that data. Now, naturally, there's a pragmatist that sits in between those two extremes, call it the fat middle, where I actually think that that's sort of the future model. You have to be good at one model before you can do the other. I think when Reklaim started, it was all about, you should be paid for your data. Here's a method for that to actually take place. We've demonstrated that model works. I'd like to believe that we're probably the only company, public or private, that has demonstrated an ability to actually consistently grow that model and actually have a profitable model. I mean, people can do their own research, but I do believe that is the case. But now we're kind of onto this other side, which is there is a subset of people who don't want to sell their data. That's just the reality. And then you will get the person who says, oh, the $10 or the $5 isn't worth it to me. That's not technically true, because that same guy is carrying four different loyalty cards in his wallet, and it's exactly the exact same thing that's happening. So, but we don't kind of talk about that kind of hypocrisy. But the intention here is like, that's fine. If you don't want to sell your data, are you interested in protecting your data? And so one of the things that we do inside of Reklaim is that we actually do dark web monitoring on the data that you've actually put into your wallet. So your phone number, your email, all that data that's in there, we will scan the dark web to see if it's been exposed in data breaches. And so we will then kind of notify you to say, hey, did you know that, that we found your data, in a data breach, and then we will give you some remediation options as to kind of how to fix that. You should expect, as kind of time goes on, a lot of those tools on the privacy side will continue to increase. And you can just philosophically, you can see where this is going. There's data, there's monitoring of the dark web. We discover that you've actually been in a breach. Do you want sort of this enhanced or 24/7, dark web monitoring? Sure. Well, that's a cost. That's a SaaS-based model that now complements the compensation model. Secondarily, we actually do a scan specifically against those data brokers. Would you like us to remove you from those data brokers? Yes, that too is a cost, right? So you can see where there is this stack associated to giving consumers more empowerment and tools to control and option their data. We've also been, building a more personalized privacy assistant. We built it on top of Facebook's Llama 3 AI protocol, but in that it's more natural language and more conversational, where we could say, do you want us to check to see if you've been in any data breaches? Yes, we found you in this data breach. And then you can ask them the questions. Would you like us to actually change your password? Would you like us to do a security scan on your device? Would you like us to give you some options? So there's a lot more dialogue that can happen down that road. So as you kind of get into 25, I think that the compensation model will continue to grow and scale. We're at that time of year where it's always about, well, what else are we doing and what are we adding to the model? I think something to keep an eye on is, how are these sort of new privacy initiatives actually finding their way into the product? And what I do feel what will happen is that the product won't be entirely compensation, but it will be more balanced. It'll be compensation and privacy, and that should satisfy both ends of the consumer spectrum. That's how I vision it.
Sounds great. Sounds like there's a lot more upside in terms of the evolution of the product and some of the protection and things that consumers can sort of choose. One of the things that's kind of frustrating just as a consumer is you hear often that there's been like a breach or a hack and your information is out there, but you don't necessarily know how or who. Maybe there's something to be done in that at some point.
Oh, that's like a pet peeve of mine. So like, I rant and rave about this all the time. Like back to the AI bot, you were discovered in the Life Labs breach. Would you like us to actually change your password for you? Yes.
Yeah.
Would you like us to determine if there's a class action lawsuit? Would you like us to enroll you in that class action lawsuit? Should that class action lawsuit be successful, would you like to receive remediation and payment through the Reklaim application? Right? Like the thing that pisses me off about the breaches is sort of twofold. First of all, most companies, well, I would say 99.9% of companies are ill prepared for kind of the evolution of security. Like they're nowhere close. And if you think breaches was bad now, create a cocktail of breaches, bad actors, and AI, mix it up and see what happens. The issue here now is that the level of sophistication around security and breaches is growing so quickly that the ability of these sort of slower moving companies that are holding these databases full of private information, they're all getting hacked. Every single one of them. The consequence of this is, as a company, you have, call it cyber insurance, you get hacked, you disclose it to the public, you feel shame, you pay a fine, everybody moves on. The problem with that is that everybody's data who was exposed in that hack is then actually added as an additional input to, the dark web profile that they have on you. That spam text that you're getting from Rogers, TELUS, and Bell like 3 times a week, that's a derivative of all of those hacks that have happened prior. And so the issue that I have with kind of how we sort of deal with data today is that the consumer is left on the hook for the carelessness of the company. And the carelessness of the company can be satisfied with a fine and and some reputation PR. But the consumer is left dealing with that hack literally in perpetuity. And so part of this idea about kind of creating some of these tools for consumers is how do we actually, help that consumer specifically with that exact example that you just mentioned. Ticketmaster was breached. Ticketmaster is going to get sued. They're going to pay a huge fine, but every single person that was in that Ticketmaster breach are going to be suffering the consequences of that breach forever. And I've had this conversation with every class action lawyer in Canada. All of the way in which they're approaching that market is fundamentally wrong. There's a huge opportunity specifically around changing the narrative and the liability around how companies are actually losing data because of their own carelessness. It should be way more onerous than it is, and it shouldn't be based on the fines that people are getting. That's on my list. I'll deal with that at some point in the future, but I haven't gotten to it yet.
Well, very cool. I'm rooting for you there because I'm sick of getting those spam texts and finding out that somewhere my dad has been compromised, and I have had some bad things happen in the past due to it. So that'd be pretty big. Maybe we can kind of switch to a different topic here a little bit. Maybe we can talk a little bit about, revenue. In your Q3, you increased your revenue 61% sort of year over year over the same sort of quarter. And you talked earlier about some of the growth profile. Sounds like there's some pretty healthy tailwinds, some additional sort of like products. Is that something that investors should continue to sort of like anticipate or expect, is that you're going to continue to grow at a pretty rapid clip?
Yeah. The short answer is yes. We don't have a demand problem. We have an awareness problem. That's the short answer. Our demand isn't, we're not finding ourselves in many boardrooms where brands, agencies, and platforms are saying, this is a terrible idea and we don't need your data and we're not going to work with you. That's not our issue. We're a small team trying to get into these offices and it takes time. as the company grows, so does our awareness, and it creates a better opportunity for us to increasingly sell more data. But I think once you've made a decision to work with Reklaim, there's not a lot of incentive to then stop working with Reklaim to go work with the next company. There aren't really any other companies kind of doing what we're doing, and we're solving a pretty important problem, and that problem seems to be growing. So I think, the market's almost divided into kind of three buckets. There's those that identify that they have a problem, they need to solve it. That's our sweet spot. There's those that actually have identified the problem as it relates to, we have to change data providers, but they're not quite sure when and how. And then there's the other group that are completely oblivious to sort of the changes in privacy. And those are longer term kind of opportunity for us, but we have to really educate them through the process. So I think as it relates to, the business, what I always say, and I encourage anybody who's kind of watching this video, you should read the letters I write every quarter. I spend a lot of time with those things. So even if you're one of the 3 people that actually read them, it will give you pretty good context as to where we think the market's going and what we think the catalysts are. But I think for us, ultimately, a lot of the moves that we made in 2023, sort of in Q3, it takes time for them to kind of manifest in the following year. And, I think when you look at the Q3 number, it wasn't because we had one client all of a sudden appear. It's really about kind of changes that we made and people that we brought in and scale that we brought in at the beginning of 2023 that manifested over those quarters. And, you're seeing the benefit of that in Q3. Just obviously the same thing happens for kind of the next year. A lot of the moves that we've made here in 24 are not necessarily for 24. They're so that we can continue to grow in 25. You can't grow 100%, 50% by doing the exact same thing with the exact same people. So we're trying to be good custodians of capital and figuring out where's the best bang for our buck. The one thing that you should be conscious of is we don't have any appetite for growing top line unprofitably. 0. So I'm not doing that.
We don't really, I'm not one that likes window dressing. It doesn't work. People see through it. So
look, a younger version of me would do that. But I've kind of been doing this now. And you just sort of realize that those are mostly sort of ego driven vanity metrics, and they just don't last. What we like is that we like to be in control of our own destiny. And if we are a company that is growing, maintaining margin, generating free cash flow, and has, a bulletproof balance sheet, we're in control of our destiny.
Right.
The stock price, could be better for sure. But what I always sort of say is look, I can't control that. What I can control is what happens in this company. And I say this all the time, but, capitalists have this uncanny ability to find value. And so if you continue to kind of put your head down and do the work, capitalists will eventually figure it out. It's the whole reason capitalism kind of works. So those are the things that we can control. If you're burning a ton of cash, you have no control. And really, you have no control over the future of your company. If you're generating profitable growth and continuing to grow and continuing to expand, you're in control of your own destiny. And from my personality, that works. I don't like not being in control. So.
Great. And in terms of what do you, if you were to extrapolate out, what's your sort of run rate in terms of top line, and what's that sort of looking like if you were to extrapolate based upon, an average kind of quarter?
Well, I think Q3 is a good context. I think that was the best quarter that we've ever had. And Q3 is not normally the best quarter of the year. Usually Q4 is the best quarter of the year. So if Q1 is here and Q2 is here and Q3 is here, that bodes well for Q4, but it should give you a pretty good trajectory as to what the run rate looks like. We always go into the year trying to grow 100%. And we do that from a hygiene point of view, just because it forces everybody to kind of rethink the product, the process, the approach, etc. All that planning is kind of crystallizing now. But I think intuitively, the things that we've done here in 2024 will bode well for us to continue to grow at the rate that we're growing now for the foreseeable future. We don't really see any change. I'm looking at what are the additional catalysts on top of that that can kind of add a bigger hop to like what the business is. But I feel pretty confident about kind of that 30 to 50% organic growth based on how we're building the business and growing the business, with the caveat there being that we're going to grow as fast as the cash flow allows us to grow. And if the cash flow grows faster, we'll grow faster. And if the cash flow doesn't grow as fast, we won't grow as fast. That's the throttling that you should always be kind of conscious of. And what I do tell people is that there's a fine line between kind of having a lot of cash on the P&L and then having no cash on the P&L. I have a high watermark. There's a certain amount of cash that I always like having in the business. Any dollar kind of over and above that, though, I like that going back into the business. And so we kind of use that as our benchmark, which is this amount of cash always has to be in the business. I don't want to fly that close to the sun, but I also am not going to have this situation where people say, oh, you made $1 million last year, you're going to double, so you're going to have $2 million in the bank. No, zero situation where that will happen, because there's no benefit to me having $2 million in cash when I could be deploying that into the business to grow the business at a faster rate. So it's just people like to kind of get very finite when they're starting to thinking about modeling the company. Like,
Sure.
Oh, you did A, therefore you're going to do B. Well,
Right.
Yes, that's a model, but that's not actually how the business runs. This is a growth business. So the money that we make is oxygen for the business to allow us to continue to grow. And if you don't invest that money into the business, you will not have top line growth. So like you have to kind of make sure that you're balancing how much cash do you want to have in the business and how much of that do you want to be reinvesting in the business so you can maintain your growth rate. I think we're pretty disciplined as it relates to that. But I always kind of tell everybody, because people always ask me, how fast are you going to grow the company? I'm like, as fast as the cash flow allows, period. That's always the standard answer. Like, well, have you ever thought about doing this? I'm like, nope, we're not doing that. And if you want that, you got the wrong company. Like, you can go to that guy and he'll tell you he's going to do all this M&A and he's going to blow the top off it. I'm like, that might work out for you. We're going to just keep doing the work and we're going to keep our head down and we're going to grow profitable growth. And if things opportunistically present themselves, we'll investigate them. But that's not what we're built on. So we just try to manage the expectation around it.
So you're not necessarily going to be a fast growing roll up play.
Yeah. I mean, no, we're not.
You're right.
We're not.
You're focused on organic growth. Sounds good. Now, in terms of your, like as a consumer, can a consumer based anywhere opt into your program, or is it they have to be based in the U.S., geographically based there?
Canada and the U.S. Canada and the U.S. currently, yeah.
And in terms of your revenues that the company, where is the bulk of that revenue come from? The U.S.?
All of it, the U.S.
Okay. Well, that's boded pretty well for microcap investors investing in Canadian listed microcaps where they have the bulk of their revenue coming from the U.S. It's been not a bad place to be the last couple of years. So maybe we got something here.
We're starting to see that because, I would say, I sort of mentioned this before, like we have a visibility problem and some of this is our own fault. We haven't raised money in 3 years. So that people say, that's great. I'm like, yes, it's great. But the problem is that you're on nobody's radar. I sort of discovered this when I was at an event in Vancouver, probably 2 or 3 months ago. I was running into guys who had seen this story and they were like, whoa, you have come a long way. Like we lost track of like what's been happening. So we're trying to increase the visibility of the company, but in a thoughtful way. Doing interviews like this is one of our way. We're not interested in sort of, doing, traditional kind of IR and kind of promotion.
Yes.
It's just not in our DNA. So we have to increase the visibility of the company. But I think what we've also noticed here is that this is a technology company on a mining exchange in Canada with 100% of its revenue coming from the US. I'm starting to see more attention from US guys. This is the one thing that started to change, is that because we've been consistently hitting these sort of profitability numbers, we're starting to attract, I think, a bit of a different type of investor, people who are looking for profitable small caps, ones that are still growing, maybe ones that, are not on people's radar. And I think like that's starting to be like what we're seeing. I do think that increasingly in the future that the makeup of investors in this business will probably be increasingly more US based, because up until now, it's been virtually almost 100% Canadian based investors.
So, sounds great. Sounds very interesting. What's the sales cycle look like for your business? Is it a long sales cycle? Are you able to leverage what you've done before? Is it still early? Are we still in the infancy, the early adoption side of it? Maybe you could talk a little bit about the sales cycle
Kind
and
of 90
maybe,
days. It's sort of 90 to
okay,
120, 120 days. And, I think that's part of the nature of the business that we're in, is that there tends to be a lot of quarterly planning amongst our individual clients. And so you're either on the buy or you're not, in that kind of 90-day cycle. Now, the one positive is that it's a kind of a quick no if you're not in there. Nobody likes the long no. The quick no is better than the long no. And so for me, what I kind of like is you get another kick at the can every 90 days. So if you miss out on this overarching deal and it's like a 2-year process, you're kind of stuck. Whereas if we're trying to educate somebody to work with us and we don't get on the plan, it doesn't mean that we're not on the plan in the next kind of 90 days. And then what we've been pretty good at is once we get on the plan, we stay on the plan. So it's not as simple as everything is 90 days, but we've had clients, where they've gone cradle to grave in less than 2 weeks because they get introduced to us and they're like, whoa, this is exactly the problem that we have. We need a solution for it now. And you're up and running within 2 weeks. In other cases, it obviously goes outwards to kind of 120 days. So, I'd say if you're looking for kind of a stake in the ground as to like what the common one is, it's between 90 and 120.
sounds good. And Q4 has typically been your stronger quarter. Q1's typically been a bit of a weaker quarter. What's the discrepancy there? Is it related to budgets for brands and things like that?
Budgets and holiday. So, everybody kind of blows their brains out, kind of, spending and promoting around Black Friday, US Thanksgiving, and the
Right.
holidays. So Q4, tends to, obviously be way heavier. Budgets tend to get reset in January. Everybody's kind of hung over from Christmas and late and getting back to the office. And so everything's delayed. That's directionally the best way to think about it. So everybody kind of starts new, and it's not that different than, our fiscal year goes January to December. So does every other brand's. So, they're starting new, they're trying to think about what they're doing, and it takes them some time to kind of get up and going. January is always super slow. It's just tough to kind of get things going. But yeah, if you look at any of the years, it's kind of always the same pattern. Kind of Q1 is generally lower, Q4 is generally higher. We've had some examples in years past where Q1 in the following year is actually higher than our Q4. That's a very good signal that we're going to have a good year. If our Q1, which is typically the lowest quarter, is higher than our Q4 from the previous year, again, using the same kind of directional graph, it's like, well, if Q1 is going to be good, then once you get out to Q3 and Q4, you should be in a good spot. So,
Well, if you could just do that, that's what I'd like for Christmas, is if your Q1 could be higher than your Q4 that has yet not been announced. So if
yeah,
you could do that, that would be great. But in terms of the margin in the business, is that something, pretty impressive margin? Is that something that you think is going to shrink with, like, I would say, I would think that there'd be additional competition sort of incoming if there's such tailwinds for this sector.
it's not going to grow and it's not going to shrink. So, the last quarter was at 82%, and that was a bit of a surprise. I wasn't expecting it to get that high. I try to tell everybody that, it's going to bounce in and around between kind of, let's say, 78 and 82. I wouldn't, if it went from like 82 to 65, you should probably call me, but I don't sort of foresee that happening. We've been pretty consistent in being able to maintain these margins for quite some time. That's not really something that's kind of on my radar that I'm that worried about, to be honest. I think you should be expecting that margin to continue as is for the foreseeable future.
Cap table, maybe you could walk us through it. Maybe the structure, we'll start there. How many shares are out? Are there any warrants? What's the price? What's the insider ownership percentage look like?
Yeah, so 116 million shares, 35% ownership. I'm the biggest owner. I kind of represent basically all of that. There are some warrants. There's 24 million warrants outstanding that expire in June of 2025. The strike price on those is 10 cents. We have a force exercise at 15. So you can do the mental math there is that, there's $2.5 million in potential cash coming into this business that's already sitting on the cap table. I'm indifferent as to whether or not they exercise or not. I mean, naturally, I'd like them to exercise because it would suggest that the actual stock is moving in the right direction. But we recently also introduced a share repurchase plan. So if, the public market or the stock doesn't cooperate, we'll just take the free cash flow and start buying the stock. So, what's better, having 24 million warrants roll off the cap table or actually having a subset of the 24 million warrants actually execute and you have a whole bunch of additional cash on top of a business that's running 80% margin, generating free cash flow, so on and so forth. I could argue both, candidly. But the cap table is in a good spot. As I said before, we haven't raised money in sort of 3 years. We don't have a desire to raise any money right now. And people say, when are you going to raise money again? And my answer is hopefully never. Like, candidly, hopefully never. That's my goal, is that if I don't have to raise money ever again, it makes my life a lot easier. I never say never. Just obviously
Sure. Yes.
with a grain of salt, but we don't need to raise money to keep the lights on here. That's an important piece. We would raise money because we felt that there was a unique opportunity available to us, and based on that, we would actually do it. But so the cap table is pretty tight, and I think it's only going to get better as you kind of work through the first and second quarters of next year.
In terms of your share buyback, what's sort of been announced, and have you ever done that before, or is this the first time?
Yeah, so I think people got a little bit over their skis when we kind of put that out there. They're like, oh my God, you're going to go and buy like 10% of the stock. No, we're not. I think the intention was I didn't have that in my T's and C's. So I didn't really have an option available to me. So of buying the stock back if I wanted to. And so I needed to kind of put it in place so that if there is a point in time in the future when I actually want to take advantage of it, I can. Have I bought any stock back? No. That's not where we're allocating capital right now. There's better uses of capital than buying back the stock right now. That could change in the future. And if buying back the stock is the best use of our capital in the future, then we have the ability to take advantage of it. Or if we have a bunch of cash that kind of comes into the business, we can, in the stock's not cooperating, we can use it then. But it's really just there as a placeholder, as a tool to have in our kind of tool belt should we decide to use it.
Excellent. And does the company have any debt?
Yeah, we have about 800 grand in debentures. I own about half of that. So I would expect that too will kind of roll off here. Again, just using the sort of the mental calculation around kind of things like warrants is that, am I going to raise money to remove the debenture? Not really, especially considering that it's fair to say it's a friendly lender, considering I own kind of half of it. But I think a natural thing here would be is if a subset of those warrants came in, will we use that cash to kind of remove the debenture? Yes, that would be the first place I would actually do it. So if you kind of put those various things together regarding warrants, price, debenture, it's foreseeable that, you get on the other side of June and again, you have no debenture, so no debt, the warrants are exercised, you have additional cash, free cash flow, the whole balance sheet, P&L, cap table structure is even better than what it's kind of looking like right now.
What's the term on the debenture, and does it offer any ability to convert?
Yeah, we've converted some of it already. And so, I think the original debenture, this was when we did this when the stock was at 2 or 3 cents. So we didn't want to do a whole bunch of dilution. So I put in kind of a bunch of cash, and then there was an investor that is a big investor in the company. They kind of followed my lead, and we did that so that there wasn't going to be a whole bunch of dilution. We've gone from 1.6 to, and then directionally, this is kind of where we are. We've got kind of gone from 1.6 to 8. And over the course of that time, you can read this in the MD&A, like we've converted portions of it at incrementally higher rates. So we even did one, I want to say earlier in the quarter, probably maybe a month ago. And I think we converted it at 9.5 cents.
Okay.
And to put it in perspective, when we did that deal, the stock was at 3, right? So again, the math suggests like it was the right thing to do at the time. So yeah, I think though, it's done what it needed to do. It's a friendly investor, but I think you can kind of count on the debenture sort of going away next year for sure.
Okay, sounds great. And what are some, I guess, interesting sort of sector kind of catalysts and catalysts for your own company that we should watch out for as it's a newer sector for us?
Well, I mean, look, I think that this idea of data and privacy is all around you. It's the narrative that's driving kind of the fight between Musk and Sam Altman as around, ChatGPT and it being a for-profit company. And like the whole narrative around AI is increasingly about data, privacy, ingestion. And I've been on record as saying AI and privacy are on a collision course. What happens when those things collide? We saw what happened with that as it related to sort of social networks. So I think that that's a huge catalyst. You have 50 states in the US, 19 of which have changed their privacy law in 12 months. That's going to continue. You fast forward a year from now, are you going to have 35 states with different privacy laws? Probably. There's a bunch of data kind of coming back or revenue coming back into the market because of these privacy changes. Traditional data brokers are having to leave the market. So who's going to pick this type of things up? These are all huge initiatives. And then we also sort of made some kind of points here specifically around the intersection between optionality and control of data and privacy. So consumers have had this ability to do compensation. I think this ability for them to then venture in and do services to protect their data is something that we think, pretty positively about because of all the reasons that we had talked about earlier in this chat that, you don't have a lot of tools in your tool belt to kind of remediate your data being leaked in a Life Labs, Ticketmaster, AT&T breach. Who is the company that can actually help you with that? So those are big ones. And then naturally, like how is natural language processing and AI going to impact kind of traditional applications? I'm personally of the belief that traditional applications are not long for the world and that everything is going to be moving to a UX or an interface that is more surface level and conversational. I think you can expect Reklaim to have a feature parity large language model that will do the exact same thing. That's something, I mean, I'm not saying anything that's out of school. You can go to ai.reclaimyours.com and you can see this product now. So I do think that that's kind of something that is interesting just because the inherent interaction with large language models is so far superior to the interaction that you would get in a traditional application, just by the way it's actually constructed, that by default, it's really hard to justify why you should build A, B, and C into a native ecosystem when you should be building that into a larger language model because the whole interaction there is just so far superior. And that's not just a Reklaim thing. That's really anybody. I think all applications, all companies need to be rethinking that we've communicated our brand and our messaging through websites and applications for the last 25 years. That's not how people will be engaging with content and your brand in the next 20 years. They're going to be doing it through these models. What is your pivot to that? We're on top of that. So we're all over that. AI isn't about efficiency and it's not about chips. We're not in that. We've used the AI to improve efficiency a long time ago and we don't do chips. You're entering this new stage of AI where it's more about what are the business models and the products that are going to manifest in the market that are providing tools to consumers to solve problems. So Reklaim, we think, is solving a problem in a web/app ecosystem. We think that needs to move to a large language model.
And in terms of your product, it's like an app that you would go to the App Store and download onto your phone. And then there's a wallet aspect. What does that wallet, it connects to like your bank account and PayPal and stuff like that?
Correct. Exactly.
And what can you hold in that wallet? Is it just cash, or is there ability for other potential forms of payment?
Yeah, I know where you're going on this. So like the idea there is, it basically is there to hold cash. I mean, historically, yes, we used to support crypto as well. We stopped supporting crypto. And again, I have a long history in that space, not because we didn't want to. We think that data and control of data and the blockchain have this natural kind of intersection. There's a very kind of quiet pressure here amongst Canadian and, well, I'd say US based banks regarding AML and crypto. It became almost impossible for us to continue to support crypto in our product
Okay.
and still having relationships with existing banks. So like they're kind of quietly suffocating that industry a little bit, I find. And so we just felt like for the subset of individuals who were redeeming their royalties in reclaiming crypto, that the amount of headaches that we would have to jump through from the equivalent of like the RBCs of the world and everyone else was just like, it just wasn't, the juice wasn't worth the squeeze. And so we're like we're
Yes.
fighting a battle that is way beyond kind of our battle. So we
Right.
kind of move that.
No, I do know that a number of Canadian, like if you're a corporation, one of the stipulations for having an account is that you do have to indicate that you're not going to participate in crypto from a business. So otherwise, you can face debanking and things like that. So, anyways, that's cool. I was just sort of wondering maybe where there might be some other aspect if you've already gone and built a wallet. So thanks for answering that. Um, Up until recently, the Canadian microcap space has been a tough place to be. I think you kind of commented on it earlier that, somebody else can have the job. You love obviously the product and building and all that, but sometimes the role, itself is not the most glamorous sort of role. How do you find the sort of sector now? It's for me, in the last couple of years, things have started to turn around, and we've started to see companies that have good quarter over quarter sort of improvement, incremental improvement, start to get rewarded a bit. Are you sort of feeling that?
A little. So, I mean, to be candid, I mean, the microcap and small cap market is still terrible. Like, let's be honest. Like I would say it's not great. And we made the decision a number of years ago that and again, this just makes sense, right? Which is the speculative investment stuff just doesn't work. So the idea that, you're going to have a concept stock, you're going to burn hundreds of thousands of dollars a month and like people are going to invest in it. That's just, you're drunk if you think that's happening. Like it's just not happening. So, there was a point in time where there was this sort of euphoria in the market and small caps were going crazy and there was all these terrible business models that, people were investing in. And then the tide went out and everybody got their face ripped off. And like all of a sudden kind of everybody left small cap. And so, we were kind of caught up in that as well, because like at that point, like we weren't a profitable company. It was pretty early in our process. And I remember this vivid. I'm like, look, we need to get like enough of this kind of bullshit. Like we got to get to profitability kind of now, because one, there's no capital in this market. And if there is capital in the market, it's predatory at best. And we have no control over our future if this is kind of how we're going to run with it. We made that decision, I would say, long before a lot of these other companies did, like at least a year. And I also just believe that there was really no catalyst to the stock if you did not have a profitability line underneath it. There was technically no floor. So that to me was almost like step one. You got to put a floor underneath the stock. And back to the idea of kind of capitalism, like if you make money, there's a soft floor underneath the stock, because at some point you kind of hit the value metric for somebody else. If you don't make any money, there's no soft floor. There's no floor at all. You can go to half a penny. So that was sort of the first thing for us. And so I think what's happened is that over the last couple of years, the individual investors who have been believers in the stories that they're already invested in and who know the management teams and the products intimately have been doubling down. That's my own personal opinion. You kind of probably own your own basket of small caps. Maybe you're even doing the same. I don't think that there's been a ton of new investors investing in new names. I think it's been the same investors doubling down on those names, saying this business is actually a good business, and the risk versus return is good. This is the one thing I think is starting to change. Now I do feel that there are new investors coming in off the shelf, off the street, and they are investing in new names, but they're only investing in the names that have done all those things that we just talked about, that have demonstrated a kind of a profitability line, a growth line, so on and so forth. And whether that's they're coming in because, the valuation is you're starting to pop up on screeners, I don't know. But I think what we're starting to see is, like a lot of things, there's always a handful of kind of companies that there's a bit of FOMO, where companies get a little bit of momentum and then everybody piles into them. There's sort of this next batch of names. Maybe we're in that where they've not been on the radar of these other companies, as some of these other companies, and those people who might have missed out on kind of the first opportunity, or looking at, I don't know, diversifying from NVIDIA, and they're like looking for something of actual value. They're like, well, I can't go into small cap A because it's run up 200%. That's where, I think we're starting to sort of see some love. But I mean, look, there's other people who believe in the overarching kind of short on the market, that the conspiracy around that. I'm not sure I necessarily believe entirely in that. Do I believe that there's a ton of algorithmic trading that really hurts a lot of small caps, especially those whose bids and asks are really wide? Probably, for sure. You can't really solve that though, but there's, you can have, if you have good volume and good investors and new investors, and your bid and your ask is tight, you're just becoming less interesting to an algo. And that's kind of the best you can do. If you don't play offense on that, I think you're kind of leaving your stock to just kind of bob around based on whichever way the market. I mean, it's very hard to kind of run your business that way. And I say all the time, I can't control the stock. No, you can't control the stock, but you can kind of put, the things in place that I think, and you learn this over time, that if you're going to be in small cap, these are things that you have to do. And if you're not willing to do them, then you need to be prepared for your stock to kind of constantly go like this. And all that's going to do is piss off your investors, and then everyone's going to leave. So you kind of got to play offense on some of the hygiene stuff, whether that's visibility, keeping the bid and the ask tight, making sure that there's volume. All that stuff is good for investors who are looking at venturing into the stock, because ultimately they pull up the chart and they're like, well, there's depth here. It's not all over the place. There's lots of investors. Okay, so I feel a little bit more comfortable getting into the stock. I mean, you're a specialist in this. People will easily get into the stock, but they're always worried about, can I get out of it? That's the other one. So if you don't have any volume, or you don't have any new investors, it creates a different risk profile for anybody who's trying to buy the stock. So I think it's better, but I think it's only better for I think the market is only better for companies that are actually profitable. I think it's terrible for a company if you are burning money and you are looking for money. I don't know how those guys are going to make it.
Well, on that note, why should investors consider buying shares of Reklaim today?
Well, I mean, look, everybody's an adult, so you can do your own research, and you should only invest in Reklaim if you think that you can get the best return here. If you think you can get a better return somewhere else, you should put your money there. I think when you kind of look at what we're doing here as a business, the risk profile associated to this business today versus where it was last year, it's way better today. The stock is technically at the same places where it was kind of last year, marginally. So the business is better. The risk profile is less. The risk profile is less, but the stock is basically in this exact same spot. So is it better to buy this stock at 9 or 10 cents today versus at 9 or 10 cents last year? It's not even close. You have a full year worth of kind of financials and profitability, an additional full year of profitability, so you have more kind of consistency there. I think if you look at kind of price to sales and all the traditional metrics, look, I think it looks directionally cheaper. Every CEO is going to tell you their company's undervalued. That's because they're all egomaniacs. So like, that's just the way it goes. So it's not my job to tell you if it's undervalued. I think it's just, you just got to kind of do the math and like, look, do you believe in the trend of this data market pivoting? That's the first question you should be asking yourself. Do you believe in this trend of like data breaches and security? Do you believe that consumers should be in control of their data and have more optionality? These are larger kind of macro trends. You first have to believe in those. It's not that, do you believe the combustion engine is going to move to EV? Do you believe that bricks and mortar, like if you don't believe in that, then you're not going to invest in Chewy, right? So you first have to believe in the theme. If you believe in the theme, then what I tell everybody is go out in the market, go and find me a public or private company that's further ahead than Reklaim. And if you can do that, you should invest in them. I don't think you will. That's my personal belief. But I'm biased. I'm like, I don't think you will. So if you believe in the theme and you can't find anybody doing this better than us, then maybe you want to nibble around at the stock. That's kind of my feeling.
Hey, Neil, why don't we leave it there? We were just over an hour. Very, very interesting conversation. Thank you for spending quite a bit of time explaining it. It's a really exciting space. It's a space I think everybody can kind of relate to, this whole idea of personal data and our privacy and what's going on. And it's a complicated sort of world out there, and you guys are playing in an interesting spot for sure. So it seems like that market should, seems like there should be some more momentum with other U.S. states, which means there might be some more demand needed from brands to work with you. So anyways, I wish you lots of success. Thank you very much for your time, and I'd love to catch up with you here in another couple of months.
Anytime.
All right.
Happy to do so. Glad they were able to connect.
Thanks, Neil.